The AI boom is transforming the real estate industry. So how should you invest? Well, we're seeing a massive build out in data centers to meet demand. And today we'll hear from leading real estate investor Dennis Mitchell about the opportunities and some key stocks that you should watch. So let's get started. This is Ticker Take.
John, AI has had a huge impact on the real estate industry.
Boy, it really has, Caroline. Here's a stat for you. Bloomberg recently reported that spending on data centers in the U.S. about to surpass spending on office construction for the first time, so it's huge.
Yeah, and to better understand it, we spoke with real estate investor Dennis Mitchell.
Yeah, Dennis is one of the smartest real estate investors we know. He's the CEO and Chief Investment Officer at Starlight Capital, and he's been watching this trend very closely.
All right, let's hear from Dennis now.
Dennis Mitchell, great to see you. Welcome back to Ticker Take.
Thanks for having me, John.
So everybody's been talking about the AI boom. How is that impacting the real estate industry?
Well, anything that impacts sort of economic activity is always going to impact the demand for real estate. If you think of our day-to-day lives, most economic activity takes place within real estate, right? I mean, for 80% of our, this is an economy that is 70% consumer spending, 80% of which is still physical and in place. So shopping centers. For the 20 some odd percent that is e-commerce, that means industrial real estate, warehouses, logistics. I work in an office building, right? I mean, a ton of our population lives in apartment buildings. So anything that drives economic activity is going to impact the demand for commercial real estate. And just the sheer tens of, if not hundreds of billions of dollars that is being spent on AI builds, whether it's to support AI through cloud investments or direct AI investments to build out language models and AI helpers and such, all of that creates a demand for commercial real estate, primarily data centers.
Well, we're going to talk about some of the companies and stocks that are tied to this big wave of activity. But what's the most important thing that investors should think about when it comes to this area?
Yeah, I think the number one thing that investors have to keep in mind is that we all love stories, right? I mean, as much as we like to think that we open up spreadsheets and dump numbers in there and that's what drives our investment decision, what it really comes down to is stories. People are captivated by how this industry or how this business is capturing this opportunity or leveraging this structural driver. We have to come back to these are investments, right? They have to offer enough return for the risk we're exposed to. Well, a lot of people made money panning for gold back in the day, but even more people made money selling picks and shovels. So when you think of real estate, regardless of whose model ends up being the model driving things going forward, who captures the most share in cloud computing, all of them are going to need data centers to store all of the data, all of the cloud, all of the data that gets created. And so regardless of who wins, Microsoft, Amazon, Google, or somebody you never even heard of, they're all going to need data centers that are owned by, well, I don't want to front run myself, but a number of the data centers and some of the opportunities we're going to talk about today.
All right, with that said, let's get to some key stocks to watch if you're keeping tabs on the AI impact on the real estate sector.
Yeah, we'll get to those stocks now, but a friendly reminder,
this is not financial advice. Stocks number 1 and 2, Microsoft and Amazon.
Well, Dennis, these are stocks that have come up a lot on Ticker Take over the last year. They remain very well-liked stocks on Wall Street. We don't often talk about them in the context of real estate. So as a real estate investor, how are you thinking about these companies?
Well, it's funny that you should say that because if you look at some of the large industrial landlords, some of whom we'll discuss later, their number one tenant is Amazon, right? So you think of the nature of Amazon's business, right? Selling, creating a marketplace for goods to go from A to B. It just intuitively makes sense that they'd be the largest landlord for some of the largest industrial REITs in the world. But increasingly, what you're seeing is that Amazon and Microsoft in particular are the largest landlords for the data center REITs, who we'll also talk about. But both Amazon and Microsoft have huge cloud computing presences, right? Like Amazon is, I think, about 35% market share when it comes to global cloud computing. Wow. Microsoft is a close second at sort of 20 to 25%, and then Google's around 13. But both of them are huge tenants for the data center REITs. So Microsoft by themselves owns about 300 data centers globally.
Wow.
Amazon is a close second at about 225, but that's just the data centers they own themselves. When you start looking at data centers that they lease space in, you're into the thousands globally. So they are huge tenants for the data center space. They are huge demand, like their businesses are very AI focused. They use AI in a lot of their business processes. And then, of course, they provide cloud computing services to a number of firms, including Starlight Capital. And then, of course, they provide services to a number of large corporations that they have partnerships with. Amazon benefits from your sort of first mover advantage, so hence their lead. but Microsoft benefits from incumbency. Like find a company that doesn't have, at this point, Microsoft 365 as part of their operational desktop suite. So those are your two horses. And Microsoft is spending about 85 billion just this year on building out data centers, both proprietary and third party. Whereas the numbers for Amazon are close to 100 billion. And those are just annual numbers. So it's exciting for those two companies and their impact on the demand for commercial real estate, specifically data centers, but also the fact that just by themselves, they drive a tremendous amount of the AI demand from other businesses and other industries around the globe.
Stocks number 3 and 4, Equinix and Digital Realty.
Okay, Dennis, when I think of the sort of classic data center real estate investments that you can look at on Wall Street, these ones often come to mind. They are well-liked companies from the analysts, but give us your take.
Yeah, so historically, Wall Street and Bay Street have preferred Equinix. Equinix is the largest data center REIT on the planet. And the reason it's preferred is because they have a co-location model, which means, a firm like Starlight Capital that isn't going to lease an entire data center can lease, a number of servers within one data center. And then as long as that data center has got thousands of interconnects that connect with other data centers, then I can connect with any of the brokers that I do business with, any of the wealth managers that we raise capital from, and we're happy. Going forward, with the amount of cloud computing, with the amount of data that needs to be stored, the balance of power has kind of shifted to a business like Digital Realty. Digital Realty has always been more focused on hyperscale data centers. So their tenants, as opposed to Starlight Capital, maybe one day, are more Microsoft, Visa, Facebook, Amazon. And so these are large businesses that will rent out an entire data center, right? So hence the hyperscale. And so with all of the capital flowing into cloud computing and AI utilizations, when Microsoft says we're spending 80 billion a year on data center builds, that's the hyperscale market. And so Digital Realty is now sort of in the ascendancy, if you will. Nothing wrong with Equinix, just two different business models, both benefiting from the spend on AI, both benefiting from the data center build out, but sort of the favorites have switched places, if you will, from Equinix to Digital Realty.
Stocks number 5 and 6, Prologis and Goodman Group.
Okay, two well-liked companies here, one based in the United States and Prologis. Goodman is an Australian company. Walk us through these two businesses, Dennis.
Sure. So Prologis is the largest industrial landlord on the planet. They've got over 1 billion square feet across 19 different countries. But more recently, what they've started to do is their business model has shifted slightly towards taking existing sort of warehouse assets and redeveloping them, as opposed to developing them, redeveloping them into data centers. So they took an asset they had in the United States, they invested 300 million into it, turned it into sort of an infill data center, and then sold it for 700 million. So that kind of ROI is pretty attractive. Then they told the market, we have about 50 of these opportunities we think we can do over the next 10 years. So that is very, very attractive. But when you put it into context, Prologis is about 100 billion market cap, and they've got a development pipeline of about 8 billion when it comes to data centers. So it's a meaningful amount of their business. It will certainly move the needle given the returns. But when you compare it to Goodman Group, Goodman's about a $45 billion US market cap. They've got a $13 billion market development pipeline, and 60% of that is data centers. And they're more focused on ground up greenfield and brownfield development. So when you look at the two businesses, Goodman is smaller, but it's got a bigger pipeline of data center development and its actual development. So the returns that you see from redevelopment that Prologis is earning, Goodman Group should deliver even better returns because there's additional development margin to be captured. And then if you look at, the biggest stumbling block, if you will, for data center development is access to power, which is a good segue into, I think, the next stock. But both of them have got enormous power banks that they can tap into to build out these data centers. So Goodman Group has got about 5 gigawatts. To put that in context, that is enough electricity to power about 5 million homes per year.
Whoa.
So when you convert that over to data centers, clearly they've got enough power that they can build out this data center pipeline they have. And same for Prologis, it's about 3 gigawatts.
Stock number 7, Merlin Properties.
Okay, this is a Spanish business, and it's very well liked. It's not a company that we've talked about before on Ticker Take, though. Tell us a little bit more about it, Dennis.
So it's probably an odd choice. It would seem on the surface to be an odd choice to talk about data centers in Merlin, because Merlin is Spanish. It has historically been a retail and office landlord. But what they've done is they've sold a very large portfolio of bank branches back to BBVA Bank. And with the proceeds, they are funding out a massive data center build across Spain. Now, in Europe, when you look at data center markets, we often refer to FLAP-D. Frankfurt, London, Amsterdam, Paris, and Dublin. Those are the core primary data center markets across Europe, but power is a limiting factor. And so now you're branching out into the secondary markets where power is plentiful and cheaper. And so Spain and Portugal, the Iberian Peninsula, stand out as a market with plentiful sort of renewable energy resources, lots of access to land, and obviously, G20 countries. So you're looking at markets there where Merlin is taking their capital, building out data centers. They have access to power. They've partnered with Edge, which is a data center developer in Europe. And so they have the ability to build out, they estimate within 10 years, half of the portfolio will be data centers. And so it's very exciting. We know the Spanish market has, got plenty of power because in one of our private investments, we're actually building a couple hundred megawatts of power in the Spanish market.
Wow.
So we know that it's renewable. We know that it's cheap. We know that it's plentiful, and land is also cheap there. So Merlin is looking to power its secondary wave of growth, if you will, by diversifying into data centers. And it's perfect timing, capturing the AI boom, and perfect timing from a capital standpoint from them. So we're excited about Merlin.
And stock number 8, Constellation Energy.
Well, Constellation has come up before on Ticker Take, and it's had this big run, still liked by about 2/3 of the street. But you were referencing earlier all the power needs associated with this big boom. So walk us through the Constellation story.
Yeah, so I'll rehash a little bit about what Constellation is. Very large energy company, very focused on sort of clean power, if you will, emission-free power. What we like about Constellation and how they're levered to data centers is that increasingly they are looking to partner with data centers to locate data centers near their existing power assets. But then a secondary strategy is also to build new sort of power plants in places where power doesn't exist or the infrastructure, transmission and distribution, needs significant investment. They'll just co-locate a new energy asset next to a new data center development so that it can feed directly, sort of before the grid, if you will. It can feed that power directly to the data center. And the plus for that as well is that if you're in that market and your home is there and your business is there, you don't have to worry about a large new sort of hyperscale data center, siphoning energy out of the grid. Now you've got captive power feeding that new data center. It's probably a welcome turn of events for you if you live or operate in that market. But very heavily focused on nuclear. That's probably part of the run-up because a lot of people have said, well, nuclear is renewable. It's the wave of the future. Some of these stocks have gotten ahead of themselves, given the idea that nuclear is probably a decade away if you're planning something now. But Constellation and sort of that secondary strategy of co-locating assets next to new data center developments, as well as building data centers around their existing assets, that's a strategy that levers them significantly to data centers in the short to intermediate period as well.
Really great perspective. Dennis, always love to get your take on real estate and this huge boom tied to data centers. Thanks very much for joining us.
Anytime, John.
All right, that's our deep dive of how AI is transforming the real estate sector. Our thanks to Dennis Mitchell of Starlight Capital. You can learn more about Dennis in our description.
Where you can also find more about all things Ticker Take, from our free investing newsletter to the podcast edition of Ticker Take. And if you're listening to us on the pod, make sure to subscribe to us on YouTube.
See
you
next
time.
That was weird.